Assalamu alaikum everyone, welcome back to PEPE update today. So PEPE continues to go down. My scenario is still in play at the moment. The fact that I'm bearish on it and the fact that I'm telling you 571 is my technical target right here still hasn't changed, and keep following the channel because we still, if anything changes, we first of all need to go to 1486. There's a long way to go if you want to change anything, because as far as every single candle passes, every single second goes by, and every single day when you tune in to watch the videos, it is just more and more clear that the coin is more interested to drop to the downside. Now, before we get into some of the details, just want to give a shout out to DXRP and SPX6969, who are the sponsors of the video. Do check them out. And we have 1060 right now, which is the current price at the moment. We've seen chart patterns, we have seen the weekly time frames, we have looked at symmetrical triangles, and to me, man, the purpose of this channel is to keep things very, very, very simple. And I told you before that that this is nothing more than a nice, good, beautiful triangle that was being created ever since January, right? From earlier of the year, every single move here was just telling a story. Every pump, every drop, it may have seemed random in the beginning, but look, that's the job that I do here in Atom Coins. We decode the language spoken in the market, right? So this is the translation of every single price action that was being taken place for the past like 250 days, and all it came up to was a symmetrical triangle. And especially when it shows up on the daily, it is a very powerful time frame. I've told you this one before as well. The daily is a very powerful time frame, and if you make things like this, especially on the daily time frame, it actually indicates that there's a strong opinion of going down, especially now that you've broken it, you even back tested it, you got rejected, it's September. Things are likely, very, very likely to go down. All right? Unless what happens? Unless you break 1486. And when you break 1486, let me just tell you one more thing. You could have patterns within patterns. Now, let's say you have left shoulder, right? And then you make a head, and then you also make a right shoulder. Now, let's say this was made on the daily time frame. You had the daily time frame and you have a big inverse head and shoulder. So you could start this on January, right? This was the beginning of this left shoulder in January, and it actually ends up in maybe November, right? Let's say it actually gets printed out on November. So during this time, you don't know what's going on. Prices were random, and then by the end of the year, you start to understand that this is inverse head and shoulder. Now, that also means that if this is January, then this is going to be March, right? This is probably going to be June. This is maybe going to be August right over here. Now, by the time from January until March, you can even make another left shoulder, head here, and a right shoulder. You could make another left shoulder, head here, another right shoulder, another left shoulder, head, and right shoulder. So I'm talking about patterns within patterns. And even in this little bit of it, you could even make ascending triangles and this and that. That's how market making actually works. And that's how traders are able to trade whatever they want to trade. So if you understand that logic, the reason why I told you that is because even though you have this symmetrical triangle, so you have a symmetrical triangle that looks like this, but just for a second, let's actually delete everything and let me show you one thing that is going on. And the thing that is going on is that you could even possibly have something like this, and you could also have pretty much something that looks like this, all right? And you may have noticed that this was a little bit of more like an ascending triangle, and even if we go by the ascending triangle rule, you still broke below the ascending triangle, and it looks like you're still meant to go down to 517, even if you go with the ascending triangle rule. But let's say for a second you do something where you go up to 1486, which is the price I'm telling you. So 1486 is still resistance. That is still resistance. It is still resistance. That is still resistance right here, and it's still resistance right over there. 4 different touches have already happened at 1486 or 1500 to round off the number. But if you end up flipping this number, you go up and you take 1790, you back test everything, you start to be bullish again, you could move to the upside. And that's why I say you can have a symmetrical triangle, but within symmetrical triangle, in the middle, this can actually even offer you as an ascending triangle. So you have to look at everything, right? You have to look. But for me personally, again, if we go back, this in the middle, do you see this line in the middle? Your ascending triangle, still it broke to the downside, right? If you go with ascending triangle definition, it looks something like this, which is normally a bullish pattern. But if you break down, you're going to go down to the main target, right? And if you go with symmetrical triangle as well, that still has broken down and went to the downside. Now, one last thing, and it is something very, very small thing that on the daily just appeared, is 3 falling methods. So I'm going to zoom in a little bit in here. And this is what I want to talk about today. That is going to be 1 red candle, 3 green candles in the middle, and then 1 more red candle. So this is known as 3 falling method. Now this is how it looks like. Normally red, 3 green, then red, and that is a bearish continuation candle. These are known as continuation candle. That means if you're on a downtrend, right? If you continue on a downtrend and you see 3 falling method in the middle, that means you're going to continue to drop even more. So that's what continuation basically means. This is the opposite. This is like rising method. It is rising to the upside. That's bullish continuation. And then on the opposite side, this is the falling one, which means you're going to actually continue to go down. So PEPE is pretty much still cooked, right? And if you want to see a very small positive, progress, then maybe coming up to 1188 is still going to be some sort of a big deal, because if you go up to 1188, that actually invalidates the 3 falling methods. It will still be a little bit positive, but it doesn't really invalidate the fact that you're going to go down, right? It just invalidates the candle. So on the basis of the candle itself, you can trade these candles and try to make money out of it. So the technical target still remains to 575 unless invalidated. So keep following the channel, and also we're opening up Q4 and October private entry for you to take trades that I also take. If you want to actually join that, then message me on Twitter, and I'm going to give you the invitation link and details on how to join. So that's it for the video. I'm going to see you the next one. Love.